Fivers at Memorex. Hello, everybody, and welcome to. Thank you for joining us today. I'm Dave Fuca with Cornerstone Licensing, and I am so delighted to be here for many reasons. Because, well, let me give you the title first, so that you know that you are going on the right plane, going to the right destination. And this webinar is entitled "Lending: Mastering Multi-State Licensing and Avoiding Common Pitfalls." I love the word mastering, and because of master, because I am surrounded by two masters of the universe, in one each, Kyle Von Amen and Suzanne Weaver. And I'm going to read their bios to you here in a second. But let me just please just get rid of some other housekeeping. I have one more thing that adults love to be read to. I'm going to read you the ultimate disclaimer for the day. We're going to try to keep this as practical and conversational. That's the intent. Having said that, the legal disclaimer for today. This information is not intended to be legal advice and may not be used as legal advice. Legal advice must be tailored to the specific circumstances of each case. Every effort has been made to assure this information is up to date. It is not intended to be a full and exhaustive explanation of the law in any area, nor should it be used to replace the advice of your own legal counsel. And I know as I read those words, Kyle's just gets all warm and fuzzy. He says, that sounds really legalese, and that's perfect. So thank you. So who am I surrounded by? Because I want to be the best official here and be as the quiet mouse as I can be, because you want to hear from these two folks. And please let me read to you once again. So Kyle Von Amen is the General Counsel and Chief Compliance Officer at Starmark Financial LLC, he says bringing over 29 years. I'm just going to give him a 30. So bringing about 30 years of experience in creditors' rights, collections, commercial litigation, and regulatory matters. He leads licensing, policy development, and audit functions, helping support operational integrity across the organization. We are so delighted not just to have him here in this brief moment, because Kyle, I just forget that I think so much like he's an employee at the time. He's such a trusted vendor and part of our back office team. So I'm glad we get to share this time, Kyle. Suzanne Weaver has 10 years of experience as a licensed owner and operator in real estate and more than 12 years in the mortgage industry, including time as a licensed mortgage loan originator and as a licensing and compliance manager. As a senior account executive here at Cornerstone, as my fellow colleague, she is a licensing subject matter expert responsible for reviewing license determinations and agreement execution with deep industry knowledge. Understatement, exclamation point. Thank you both for being here. Thanks so much. Let me kick this off again. We have the title. The folks who are on, again, know that you can always chat, put your questions in the chat. I encourage you to do so. I will see those, and we have built in enough time to get to them at the end. And I'd like to just kind of kick this off as kind of bringing out the point, or I don't want to put a bias, but I just want to say, like, we really want to introduce this as licensing as a business issue, not just an administrative task. That's kind of the intent and the message. And Kyle, if you wouldn't mind kicking us off, and I'm going to ask each of you is to do this, is share the lens that you're sharing with the audience today. How are you seeing these issues? And I know it's not fair because we're going to talk about a bunch of them, but if you can point out one issue that jumps out, like I have to talk about, we have to talk about this today. So lens that you share. So let's hear from it. And then maybe one issue that stands out that we're absolutely going to touch on. And Kyle, why don't you kick us off first? Thanks.
Yeah, of course. My pleasure, Dave. Thank you. Appreciate it. When it comes to lending licenses, I think there are a number of factors that oftentimes don't come right to the surface immediately. Oftentimes, folks are just thinking, "Hey, I need to be licensed. I need to get a license," but they don't often realize how specific so many licenses are with regard to the nature of your product. So we have to kind of look at not only what you're offering and to whom you're offering it, but how that fits into the statutory and regulatory structure of each state. And so, just to say I'm a consumer lender or I'm a commercial lender, or just in painting it with that very broad brushstroke is just simply not specific enough. And so I think that it's important to realize that every state has not only its own parameters and rules and laws, but your product may or may not fit into the scope of that licensing statute. And so that can work to your favor oftentimes. We talked to people over the years about licensing and whether or not they should get a license and whether or not they are risk averse. And I will tell you that there is risk not only in under licensing, but over licensing. So you don't necessarily want to open yourself up to not only the initial cost of getting a license, but really that bandwidth cost of getting a license that you might be exempt from needing, getting a license that maybe the scope of that statute doesn't capture exactly your lending activity. And so those types of things are the things that need to be evaluated on a state by state by state basis. And so I guess what I'm really saying is the granular level of what you're doing and who you're offering it to can often be the difference between needing a license and not needing a license. And getting that question right is a much better destination than just simply saying there's a license out there, let me go get it. So that's kind of what we try to point people toward in this conversation is getting this question right for all those reasons I just outlined.
Yeah, getting that question right. So the prompt, right? I don't know, it's just grinning as I think of, what do I ask Claude or ChatGPT, or am I asking the right question? Getting that question right to get us to the end source. And I know, I know what you're all going to get into, so I'm excited by that. Thanks, Kyle. And Suzanne, similar, just what lens do you bring to this? And what do you see as the one issue perhaps that, you definitely want us to conquer in the next 40 minutes?
Yeah, for sure. Thanks, Dave. So a big thing that comes across with me is people don't know that they actually need a license. So that's a big thing that I talk to people about. It's not necessarily just coming and saying, I want to get this consumer license in Florida, but do I need a license? And that's a lot of how we work with Kyle of helping to determine those things. Um, and just making sure that yes, they get the correct license. Even in business purpose lending and brokering, there are still states that require a license, and that's what we're here to help clarify and make sure that everyone knows what they need and make it clear for them what they're supposed to be doing.
Do you feel like you do that on a daily basis or weekly basis?
Absolutely. Absolutely. But it's
Well,
great. I love talking about licensing, so I love jumping on those phone calls and hearing about people's adventures and exciting prospects for opening new businesses and expanding.
yeah, you like it because you're good at it too. So that's great. So not shifting gears, but we have basically a couple of four flavors that we have advertised to this audience that we're going to go through. So the first one being that maybe Kyle, you kick us off, and I would say at a high level, what makes multi-state licensing so complex or unpredictable, or it seems that way, where the companies become reactive instead of proactive? And kind of a two-part, and I'll just add on that because I want to have a sense of urgency, is why, if at all, should leadership be involved in that decision making, not just the legal team or the licensing team?
Yeah, well,
Thanks.
there's a couple different things in play here. Number one, a lot of times I'll have a conversation with colleagues about, just, hey, I need a lender license. But there isn't just one type of lender license, there's multiple lender licenses. And so sometimes what the plans are that are on the immediate short-term horizon, they evolve over time as well. So what the short-term plan is may involve a certain strata of lending activity. But that activity, can be, it can trigger different statutory requirements just based on how you go about that activity. So I'll give you an example, and that's we get conversations all the time about, hey, we want to create some financing for people, for consumers to be able to buy this particular product or service. And so it depends on whether or not this is a direct lending relationship or an indirect lending relationship. And what I mean by that, for those of you who don't know, is that the direct lending relationship is just what it sounds like. It's a creditor entering into a financing contract with a consumer directly, with nobody in between that. That relationship happens within the contract. An indirect lending relationship is what happens in your typical car dealership. Right. So, what happens is that contract is actually between a consumer and the auto dealer, and the indirect lender comes in as the sales finance company. And even if it's simultaneous within that financing agreement, that sales finance company comes in and purchases that contract. So the consumer never sees anyone except for the sales finance company as their creditor. However, it is regulated quite differently than the first scenario I described, triggering all different statutes, actually exempting companies from licensing at all in a good number of states, whereas the direct relationship does not exempt you in the same way. And it creates all different parameters for interest rates, amounts financed, and things like that too. So when I initially referred to how you go about doing your business can really impact the licensing profile, that's the type of thing I'm talking about. The other thing is this. If you're not a high interest rate type of lender, you may be able to set your interest rates at a level that does not trigger licensing. So it's something very important to consider if you're on that border, or at least to know where those interest rate floors are state by state by state. They're different everywhere. And what we're talking about is not the statutes that say something like you can charge up to 23.9%. What we're talking about is a statute, and this is most of them, that say something along the lines of you need a license to lend at a rate of interest if you're charging an interest rate higher than what our statutory base usury rate is. And those usury rates are usually between now 7 and 10%. That's not true everywhere, but that's kind of basically the range. And so if you're in or around that area, you could avoid a license altogether if you're able to take your product outside the scope of that licensing floor and put your interest rate below that. And that may not make sense for you from a financial standpoint, but it very much impacts what kind of licensing you're going to need.
Yeah. Yeah. Wow. Thank you with that, Suzanne. On that same in that same vein, right? So thinking operations along the way, growth is good. We love it when our clients come back to us and say, "Now I want to go expand from Florida only to Wyoming, Idaho, out to California." I won't talk about Las Vegas and Nevada, whatever, along the way. So that growth is good. What, if any, issues do you see? What happens, or what do you see that breaks down first for them when they try to get that cart ahead of the horse, so to speak? Or,
That's
what do you?
exactly what I was going to say, was that
Okay.
I'm finding that a lot of people are putting the cart before the horse. They're doing the lending before they even know whether or not they need a license, or I'll just do one in this one state this one time, versus even just doing some base research to figure out whether that license is needed or not. Um, Staying on top of it, in making sure that you're permitted to do lending in that state is always the best course of action, is to find that out first.
Well, and
And
Suzanne, if I can jump in there, it's
yeah,
that,
please. Yeah, I was gonna
well,
say thanks.
I think we run in sometimes to not only the fact that, people maybe haven't considered that, but they also haven't considered the fact that in the application process, if later on you're deciding, okay, yeah, I guess I do need this license, my volume's gonna dictate to me that it's worth it to make the effort to get this. Now you have to answer the question as to whether or not you've been conducting this activity already. And depending on the scope of your activity, the length of time you may have been conducting it, um, just so the listeners are aware, it's possible that in the application process that something of an enforcement type of action can come out of that. So you put yourself between a rock and a hard place, right? Because you know you need this license and you didn't get it earlier and you don't want to disclose, but you have to disclose. And then now you're in a situation where paying some sort of a fine could be part of the application process. And the penalties run the gamut from, a small kind of slap on the wrist situation, or something that can be in the thousands of dollars to overcome that hurdle. And so that's really what I mean. At all costs, you should hope to avoid that.
Yeah, absolutely. You feel the same, Suzanne?
Oh, for sure.
Yeah.
I was also just thinking that not only do people maybe not take the time to figure out whether they need the license or not, and I know we're going to get into this later too, but adding a new product or changing how you're conducting business can also change your licensing profile. Um, just deciding that, oh, well, now I want to do the indirect lending. I'm already a direct lender, so it shouldn't be any different, right? So they'll
Right.
just start doing things differently, and not realizing that that triggers a change with the state and what they consider what you're doing for your business.
Great, and a great segue. I'm just going to let you transition from there. So that kind of the kickoff, you guys teed it off well, like real or perceived, or perceived or real complexities of multi-state, expansion licensing. But now let's go into okay, oopsies, right? So the mistakes come in, they have to go. So let's probably the folks that are on this call or get the most from this probably got most intrigued by it. I want to hear about the common pitfalls for several reasons. One, I want to get heads up to them, and two, I want to normalize myself. I feel like I'm making these all the time. So let's use that as a transition. Say, Suzanne, if you wouldn't mind taking the lead on this or kick us off on what do you see then? What are the common pitfalls and in particular, and you go wherever you want on it, but what seems comes out seemingly minor, but then before you know it gets it gets snowballed and carried away.
Yeah, I mean, a lot of times, just not doing the research, not even looking at it and just going with it. Don't even know if that license is required, if there's an exemption to the license. And even if there is an exemption, there are still compliance requirements for most states. And I think a lot of people aren't realizing that just because there's no license doesn't mean you don't have obligations to the regulatory agencies of that state that monitor lending. So I think that that's something that I don't believe that people are really looking at and doing their research to make sure that they are following things like that. On a more granular level, something as simple as not having a business plan together can is a big thing that I talk to people about. I do talk to a lot of startups, but even when you expand into more states, there are things that you have to update within your business and your policies, procedures, and things like that. Not even just considering, yeah, I want to go get the state license, but there are other things that have to be changed operationally and within that structure to make sure that you can continue.
Suzanne,
And
how have you, because I run into this all the time, is considering how people who, they're existing in one particular state, how do they tackle the minority of states that are out there that require maybe a brick and mortar type of arrangement? It's
good.
something to be in, Ohio and think, gee, what do you mean I've got to fly out to Arizona? Not that that's so terrible in the wintertime, but or I've got to go set up an office somewhere. How do you recommend that people handle that through the application process? Because I know I've heard you with some good solutions, and I know people need to hear it.
Yeah, that's definitely a great question. There are a handful of states that do require that physical location, and um, there are always some exemptions available. Reaching out to the state is a great way to figure out whether you need it. Being 100% online can change that requirement. There are services out there for people in states that allow it to offer services to allow them to utilize their local address to meet that requirement for a company. So you can engage with people to hold that position for you. Um, a lot of people will go and hire somebody specifically to fill that role that's located in that state. Use your network. Ask around. People talk. They know people. You go to these conferences that are around the country and you start meeting people. You network and you find out where they are, And you use those resources to help find these individuals, these, businesses that you've got a partner somewhere. Let's use their address. Let's start working there. And that's a great way to at least start looking to help fill that position.
Nice. Well, I will tell you, Dave, too, is that especially in the area of indirect lending, I've described it this way, that there are states that don't require a license. It's
Mhm.
like as if a state didn't require you to get a driver's license, but they can still issue you a speeding ticket. So the fact that you don't maybe need a formal license to conduct lending activity in one way or another, maybe you're exempt, maybe your interest rate takes you outside the scope of the statute, maybe they have no indirect lending applicable statute. That does not mean that there are not regulations around that and requirements in terms of what you've got to disclose to your borrower, what your interest rate parameters can be, and what your charges or fees could be in association with that. So just a warning there that just because you don't need a license doesn't mean it's the complete unregulated wild wild west in that particular state.
Yeah, that's a great point. And I'm just going to tag on that and say N because I was going to ask you what issues have you seen, Kyle, that perhaps create the greatest regulatory, exposure to companies by
Yeah, I
because
mean,
of some of
I, I
these.
I think the greatest regulatory exposure comes from this, comes from consumer complaint. So obviously everybody's going to be aware that, if you're unlicensed or if you do something wrong, you could get sued for that. There's either a private cause of action or there's not. But really what happens is the way this normally happens is that a consumer is going to complain about a process, maybe valid, maybe not be valid. But the first thing a regulator is going to do, or even a consumer attorney is going to do, is they're going to bump your name up against the list of licensees. And that starts the dominoes. So that's why this is so important because the regulatory aspect of consumer complaint, dealing with that, getting things right, having your disclosure, all of that, that ties in with the licensing portion because one exposes the other. And it's just important to remember that you've got to get the regulations right and the licensing right. And sometimes I will tell you that there can be a difference of opinion. I've had a lot of differences of opinion with regulators in terms of what triggers their license, the necessity to license. And so if you have made a decision that you don't need a license, I think it's just as important to know why you made that decision as it is to make that decision, because that impacts what the path to remediation is. If you get a regulator that decides you needed a license, well, and your explanation is, we evaluated this and this was our reason that we didn't think we fell within the scope of your licensing scheme, then you're much more likely to get a remediation path that involves the statement of, okay, well, just we think you need to be licensed, so go get licensed, as opposed to we think you need to be licensed, and you have to pay your back licensing fees, and you have to pay these fines. So that's the difference sometimes in the enforcement portion of this conversation.
Yeah, great points. And fair or unfair, I'm going to ask the question anyway, Suzanne. Who inside the organization should be involved, so that sooner instead of later?
Always a compliance officer. They're going to
Right?
be in charge of the majority of this review, analyzing, making sure that all the disclosures and everything is in place. Um, I love to have conversations when I hear that there's a compliance officer on staff. It helps with the regulators. They take you more seriously, knowing that you've got somebody on your team that understands more. Um, yeah.
Yeah,
So that's
makes
in the licensing process, Dave, but I want to talk a little bit about the answer to that question as it pertains to renewing your license and maintaining your license.
perfect.
Because the thing is that in the initial licensing process, yeah, you're going to have to do, provide financial disclosures and FBI background checks for your ownership team. So that's kind of important that you would understand that those things are going to be available or required. But the issue can come in when you're renewing them. you need to be able to engage your IT team because your IT team has to be able to sweep your inventory and provide a picture on a state by state basis and between a particular group of dates, potentially, whatever the examination period is or the renewal period. So your IT team has to be very adept at deciphering exactly what scope of information is required on your annual reports. And this is, of course, kind of a little bit easier of a threshold than what an examination would be, which would be a deeper dive into each of these accounts. And it's just important to remember that in April of a particular year, am going to have to go back and provide information on January 1st to December 31st in the prior year. So you're going to have to walk back and be able to retrieve that snapshot of information. Um, and that could be hard depending on what your system is and the understanding and expertise of your IT people. But that's going to either make this, an easy mountain to climb or a more difficult one.
I'm glad
Absolutely.
you said that, Kyle, because I think a lot of people make that mistake of thinking that once they hit that submit button to apply for that license, or once they receive that approval, that their job is done. Whereas that's not what the states think. They want to see your loan log. They want to know who your borrowers are, and if you're working with another lender, who are they? How are they licensed? And you know, what are you charging interest rates on all of your deals that you're doing? I do find that I think people just forget that just because you have an approval doesn't mean your job is done.
That's right. And they also want to make sure that, the numbers you provided them last year line up with the numbers you're providing them this year. I mean, recently I dealt with a situation that, 12/31 of 24 didn't seem to make sense with 1/1 of 25. So, again, that had to go back to IT and be reconciled and to understand, okay, did we pull the right thing here or did we pull the right thing there? Or were these numbers possibly true? Was there a big recall of some? If you see my point, it's just that there is some continuity to this and some thought that needs to be put into it. So the renewal process, um, it's for those of you who don't know, it's not nearly as expensive as the initial licensing project in terms of the state fees and things like that. But oftentimes, it's the part that's going to require much more internal bandwidth to get through year after year after year.
Excellent points. Oh, I just want to point out because my left brain just got happy on that, in preparation of this as well, ChatGPT is my buddy and it gives me all kinds. And I got the top three, right? What are the top three common pitfalls along the way? Number one, shocker, missed renewal deadlines, right? I mean, it's just, you're blown away by that, right? Like incomplete filings and missing documents, failure to respond for deficiencies. But you just hit it right on the head. I mean, that's it. That's what we see it. And you think, well, I'll just put a reminder on my calendar. Heck, I'll put it in 3 months in advance and we're good to go. No, right? No. It's a little, what's more deeper than that. I want to keep the energy going, or I keep this energy as you're going. We did advertise, so kind of our third subject, so to speak, is multi-state licensing in the consumer and commercial lending. So it seems, it seems like problems exist or some of these issues happen when we try to do when a company or an organization tries to do a one size fits all, right? One rule of thumb. I did it in Florida. It's got to work for Minnesota, right? So, I mean, maybe, so yes, no, maybe. And then just your thoughts on that, Kyle, as what do you see jumping off the board when you see, companies who are dealing in both worlds?
Well, I mean, first of all, there is some overlap. So, in other words, certain statutes are going to give you the ability to lend to consumers or in a commercial context, all in one statute. So you just need one license. That's not true in a lot of places. And obviously, I think it goes without saying that the consumer area is far more regulated, far more licenses required for that particular profile. But that has been changing. I guess this falls into the category of, hey, if there's no license, just don't assume that there's not also regulation. There's a number of states have come out with new commercial financing laws, which may not require licensing. Some of them do. Some of them just require a registration. Some of them are more specifically tailored to sales-based financing. Some of them are specifically tailored to just out and out loans. A lot of these commercial loans have parameters around amount financed. So you can see that many of the state legislatures that decided to regulate or create licensing for commercial financing in the last few years have done so more with regard to smaller commercial loans, believing that maybe folks that are out trying to get those type of commercial loans are less sophisticated. Um, at least that's what it seems like the rationale is for the regulation. But I'd say this in the area of not only making commercial loans or brokering those loans, the number of states has exponentially grown that are requiring either compliance with their commercial financing disclosure laws or registration or licensing or all the above. So if you're getting into that area and you haven't been in it before, you need to take a deep dive into the changes in the law in just the last few years because it's been significant. In the consumer area, that's been much more consistent and static because those statutes have been in place for a long time. But what legislatures do is they do tend to modernize them in terms of interest rate. That's a somewhat of a politically charged element as well. So those things do change. Some of the statutes are tied to prime rate or some other variable component that requires you to keep up on that. So all I can say about it is this: those are two very different profiles. They need to be attacked separately. But if you've been in one side of the business and you're moving into the other, the good news is there's probably some efficiency for you there. There's probably some overlap and some license structure that you don't need to dive into brand new, but they are related and you need to look at them together.
Squares and rectangles, they both have four sides, right?
That's
But
right. That's
they're
exactly right.
different. I mean, it's along the way. So just don't make the assumptions, right? Be careful of those assumptions. Suzanne, in your experience, what are some of the common what are some of the common things where whether a client needs a license at all? What do you see? What discussion? I know you're on quite a few calls along the way, and what are the things that pop up, and what are most likely to come up to see if they are in need of a license at all?
Yeah, I mean, Kyle hit a lot of it on the head of who is your borrower? If that's an individual, a natural person versus an entity, that's your borrower. Whether you're doing something considered as business purpose versus consumer purpose. Again, who's your contract with as a lender? Is your contract with, this individual who is the seller of the goods or this individual who is the purchaser of the goods? There's all sorts of different things that are taken into consideration when to help determine whether that license is needed or not. And that's where a lot of research needs to happen. By the owners of the company, the officers, directors, those who are running the day-to-day business. They need to know exactly what they're doing to know whether or not those things are triggering a license and if there's overlap, as Kyle said.
Yeah, and I would just add to that sometimes, depending on the category of licensing we're talking about, it matters. It matters which side of the revenue stream you're on. It matters who you're getting paid by. So this kind of falls into more um, brokering. But if you're brokering on behalf of a consumer, your licensing profile looks one way. If you're brokering and you're essentially an agent of the lenders, your licensing profile looks a different way. How you market yourself can also matter. So there's a lot of lenders, people out there today who are offering solutions, let's say consolidation loans, things like that. They're marketing themselves as some sort of remediation product to somebody's credit rating, somebody's credit score. And when you get over into that part of, especially if you're trying to get your loans out to market as a refinancing product or a consolidation kind of loan. And part of that pitch it's naturally, look, make your life more simple, get yourself one payment. This will lead to a better credit score, so on and so forth. And that ventures into the area of being a credit service organization in many states. And so I just you have to be careful sometimes about those types of things as well. And I think that that goes to what Suzanne's talking about when if you've got to know your product and you have to be careful about what your product is, who you're marketing it to, and how you're going about that, and take all of that into consideration when you're trying to put your arms around which licenses we need.
And since it's the United States, all the states got together and they're all unified. All right. So I mean, every single state does it exactly the same, or
Right.
maybe
Well, Dave, I appreciate
so.
the
So,
richness of your
right.
imagination.
So let me. So I consider myself an extreme patriot in the most positive way. All right, service to country, etc. But I would say that not all states are created equal. Is that a fair statement when we come to saying like? And having said that, all kidding aside, what jumps out most? Either one of you can jump in first to the state by state differences. We talked. You're talking about did a great job, right? Talking about the products and who you're lending to along the way. Let's talk about the state for a second, right? So
Well,
state to
yeah.
state, what jumps out at you and on those not so united codes of like business licensing,
Well, I'll talk about the legal aspect, and then
please.
Suzanne can talk about the application portion of that because they're two big parts that have the same problem, right? Is that um, you're not dealing with the laws of the United States. You're dealing with 50 different kingdoms plus the District of Columbia plus even some municipalities, depending on what type of license we're talking about. So they're a completely separate set of statutes, and you can see there's some uniformity. Really, when it comes to lending or servicing or brokering financial services products, usually there's three or four categories of states that got together and there was some kind of a forum on the ideal type of the UCC is a good example. The UCC, the Uniform Commercial Code, doesn't really exist anywhere. It's a uniform code, but there's a model version of that that's not the law anywhere, but maybe people thought it should have been the law. But then states enact their own versions of those things. So that's why every state has different interest rate parameters, lending parameters. Maybe you need a license, maybe you don't. I mean, a small loan license could be $3,000 in one state or $50,000 in another state. So we can't just talk about small loan statutes. We have to talk about what it is in Georgia and what it looks like in Connecticut or what it looks like in Massachusetts and so on. So that's the difference in the statutory element. And, in the application part, that's Suzanne's world. I don't know how she does it, but it is tough to navigate. And that's what she excels at.
Give us a little insight there, Suzanne, please.
Yeah, for sure. I mean, just as Kyle is reading every state statute and reading definitions of how does this state define what a loan is, even could be different from another state. So even on the application side of it, it's just as complex. Every state is going to have their own application process. They're going to have their own way of receiving those applications. Some of them are on NMLS, some of them are on the state agency website, some of them still require a paper application to be wet signed and mailed to them with a check. So there is so much variety on the application side. There are some states that want to have personal financial information that goes so deep you think that they want your firstborn child. And there are some states that just give me a balance sheet and we'll be fine. So even among those that do require a license, those applications can vary tremendously state to state and application to application because maybe this one state has five different types of consumer licensing, but there's five different units because it's five different licenses and they're all going to be different for the reasons we've talked about. You're doing a different uh, product. You're conducting business a certain way. Your borrower is a certain person or business. So your application is different between each of those types of licensing.
Yeah, I mean, Dave, it makes it the toughest question to answer becomes, hey, what's this going to cost and how long is it going to take?
And nobody asks that ever.
That's the first question out of everyone's mouth. It's the
What's this going
toughest
to
question
cost me?
to answer, and they get a lot of questions back. And I know that that can be
It's a good
frustrating,
question.
but it's a process to go through.
Mhm.
So
Yeah.
there unfortunately aren't a lot of simple answers.
Well, you're reading my mind and you're reading my notes. So it seems like we've practiced this before, but I love that word process. And I consider myself not only a patriot, but a process kind of guy. So we're shifting. You've done a great job identifying pressure points, right? So now maybe in the last 10 minutes or so here, we have a couple of questions, by the way, from chat. I'm very excited. Hopefully, so we'll leave some time for them. But so shifting gears, how do we address a process or how does one create a process to keep these things from slipping? And Suzanne, I'm just looking at like if a lender wants to build a stronger internal licensing framework, where should they start? And you don't have to do that verbatim, but just thinking that thought. Let's start talking about process. How do we fix this or keep it in control? Thanks.
Yeah, absolutely. Making sure that you're staying on top of your due dates, those renewals, being ready for a audit at any time, kind of thing. Making sure a lot of things that hinder companies is that they aren't responsive.
Hmm.
So if you get an email from the state, you're busy. It gets lost in your inbox because for whatever reason, your business is doing great and you're busy. I love it. The state doesn't care. If they don't hear a response from you, something's wrong. And having someone available, having a licensing lead, a regulator lead on your team, in your company, it would be so important just to make sure that they are being responded to. Um, a lot of audits, when they come in, they want to receive a response that you received their email that you're getting audited. Things like that. It just, again, just because you've got that approval doesn't mean that's the end of your responsibilities with the state. Just because you hit that submit button on that application doesn't mean that's the end. Uh, Owners, operators, directors still have to be available and be responsive. And I think that's a huge part of staying in the process of making sure that you're tracking everything, that you know when you've submitted something, who you're talking to with the state, following up on those due dates, um, joining a forum online that updates you with regulatory changes so that you know if something changes in your industry in that state for that license specifically. If you change your business model, you've got somewhere to go to figure out how that change is affected. Just things like that. Obviously, having a proper LOS would be the best way just to help stay on track of all that loan information that you're collecting and reporting, sometimes quarterly, sometimes monthly, depending on
Yeah.
those licenses. Again, very specific to the state, very specific to the license.
I mean, I can report back in my role as general counsel at Starmark how we handle this. If you are an organization that has national licenses, you probably need to dedicate one full-time employee to handling your renewals. But the issue with that is that that's not an even flow of work. There's peaks and valleys to it. So it's difficult to just say, we just have this one person who does all of that. And the other thing is that the renewal process and everything to do with licensing engages many different departments, as we alluded to earlier. That,
That's right.
you're going to have this person as maybe a conduit and they're going to ping IT and they're going to need to talk to operations about other part of it. They're going to need to know the profile of your product because you don't want to answer some of the questions in the renewal forms beyond what they're really asking for. So you need to know, all right, I've got this license and this is what it's called and pertains to in this particular state. But this license that we also need in another state has a wider scope. So it's a different sweep of our accounts. So it does have to be somebody So two things in play here. Number one is you have to have multiple people and departments involved within your organization. And number two, you have to have oversight by someone that understands your total inventory so that you know how and what to answer. Because if you just have someone with the blinders on, they can get this wrong. And again, then your annual report of this year doesn't line up with next year's and things like that. So it's a coordinated effort. And I mean, truthfully, it it sets itself up nicely for someone like a Cornerstone to do your renewals, but you're still going to need those internal portions of your organization that can provide the data and the insight into what your inventory looks like.
Perfect. Um, I want to go to questions, but before we do that, one last kind of a thought, and I know Kyle, or you touched on it, Suzanne. You said when companies are not responsive, and it really is deeper than that. Or I'm going to ask you, isn't it even deeper than that? It's like, because even if I did react, right, even if I did respond to it, isn't it more helpful to be proactive? It shouldn't the essence be, proactivity as opposed to reactivity? Is that a fair statement?
Yeah, absolutely. And I think that applies in so many different aspects of our lives to be proactive versus reactive. And that's part of being prepared and knowing what you're doing. Those deficiencies that a state is going to place on your license, and it's not just during the application process. It could be because you changed your address and now you have to do something. It's because you updated with the Secretary of State that you sold your business. Well, now the states who are licensing that business have to know these things. So there are so many things that can happen where you have to be available. You have to be able to respond appropriately to the state. I get asked all the time, I'm licensed in this state, but I want to go here, but I don't want them to ask me about the business in this state. And there's a lot of, you know, I'm sure Kyle can speak to this, of they have no authority over asking about your business in another state. Hopefully your business as a whole is the same, but they don't need to know what your loan amounts are, who your borrowers are, and things like that. Um, but just making sure that you respond timely, um, that you're responding to them. I want to say that these states they're not out to get you. That's not why they're auditing you.
Mhm.
They want to help you. They want to make sure that you're taking care of your borrower, whether that's consumer or commercial. Um, I think it's just being responsive, I think is just a huge thing.
Absolutely. Absence of communication is a communication, isn't it? Right?
Yeah.
Silence, not a form of communication, right? Kyle, one last parting shot in this process themed area along the way. So, in your mind, one or two, and you have 10. What kind of business changes should automatically, invoke a licensing review
Well,
for
I mean, certainly a change in geography or a change in product, but the other one that I think is really needs to be contemplated very intentionally is any level of change of control. So, so often conversations that I have had over the years start out with, we were gonna do X, we were gonna do this, but we just decided maybe we should just buy a company that has these licenses already. Like that's some kind of golden ticket. But of course, as we've alluded to here earlier, is that the licenses are tied to the individual owners. And the rules about change of control in terms of percentage of ownership change and the process you have to go through to make that happen. You can transfer some licenses, but I hesitate to even use that word because the implication is, you're hitting the easy button and the license is transferred, and that nothing could be further from the truth. So, if there's a change of control happening, I would say you need to engage an attorney or spend a good amount of time on it yourself, looking at the change of control rules in every single state in which in which an impact is going to be felt, because I guarantee you this, the rules are different in terms of the notice you have to put the state on. Is it 90 days before the transaction concludes? Is it within 60 days after it concludes? Whatever, but it's going to be very different. So that one is a huge one. But all the time people just need to understand that you didn't just get yourself licensed and have it apply to every aspect of every kind of activity that you're going to do within the lending world for all time. So if there's any change in your product, that's a time to take a look and say, all right, let's make sure that we're falling into the same parameters that we used to. So it's geography, it's product, and it's change of control. Those are the big three.
Well, I'm so glad you brought that up. One, because I think it's one of those problem solved, right? We solved it. I just bought this, company XYZ
Right.
to help us out. Problem solved, unintended consequences of that. And I'm going to be a twofer here. There's two questions based on just we had. So I want to give due respect to our audience and thank them dearly for following us. But going along those lines, Kyle, that you just had, what kinds of ownership or leadership changes most often require attention from a licensing standpoint? So what kinds of ownership or leadership changes most often require attention?
So off the top of my head, I would say any change of ownership that is greater than 10%, it should be looked at. Some states say 50, but some states say 25. They're all over the map. But I will tell you that if you're going to change ownership of more than 10%, you need to look at the licensing requirements around that. Um, Most of the time, if you're just changing officers, that's kind of a notice that you can do without it being a major licensing event. The other thing is that if change of this is, and I don't want to get too much into the weeds here, but if you do have a holding company and changes of control can happen at the parent company level and your subsidiary is the one that's holding the licenses, it's a much smaller mountain to climb because there are fewer states that look to the parent company entity. So, in other words, if you're licensing the subsidiary, the owner of the subsidiary really doesn't change because it's the parent company. And so it becomes maybe a 12 state issue as opposed to a 50 state issue. So that can be helpful, but I'm telling you, if you have more than a 10% change, that triggers the look.
Super helpful, super specific. Thank you, Kyle. And you're not getting away, Suzanne, because I think that I'd like you to take a first hit at this one. How early? And I was like, you can never be through it. How early should a licensing review happen when a company is planning a new product launch? How early? What do you? And I'm curious on finding out this timeline myself. Is it a day, a week, a year? I mean, how early?
Well, I feel like we're reiterating the same thing over and over with every single question, that it is very state specific.
Okay.
Depending on what changes you're doing, can depend on what type of notice is needed and depending on the state. Um, I I see that a lot of companies will review annually on certain things. Um, and then go with changes from there. But most of the time, you're looking at anywhere between, 5 days to a month in advance is typical. So when you know something's happening, it's best to notify your states and just say, hey, this is what we think we're doing. That way they can't, if there's something that's specific with that state, with that license that needs to happen, like Kyle mentioned, well, if it's 10% or more of this ownership change that you're talking about, you have to actually apply for a new license. You can't just update your license because of this ownership change. So
Well, right,
giving
Suzanne,
notice ahead of time is
if having been on the client side of this, is that if you have a product and you realize, oh, I guess I've identified this licensing change. Well, now it matters how long it takes to get that license, right?
Yeah.
And I can tell you that if you're a young organization and you don't have audited financials because you haven't had the background long enough to get it, that can be a real hurdle. You can ask for them to take reviewed financials, and sometimes the answer is no, depending on the state. So that can be a problem. There are some states you could probably identify them. that take a long time to process anything. So before you can actually pull the trigger on doing things, I mean, I've been involved in organizations that waited 2 years for a license, and there were some other complications, but that's the nightmare scenario. So I would just say the earlier the better. Because if you uncover a license, you're going to need months to actually reel that in. Maybe you might be able to get it in 60 days. There are states that take 9 months to a year. So the earlier the better.
Yeah, every time I'm with you guys, I feel like we've been here 6 seconds and we don't have to do that, but I can't believe it's been almost 57 minutes. But I've always learned, like, tell them what you're going to tell them, and then tell them what you told them. So I want you to each have one last track, right? So if you do that, I don't know if that works or not, it has for me in life, but Kyle, first, what's the biggest misconception about a multi-state licensing that you wish more companies would let go? 30 seconds or less. What's the biggest misconception that you want multi-state licensing that you wish more companies would let go of?
Just the idea that somehow this is a uniform process state by state, and that it's a uniform timeline state by state, that it's a uniform cost state by state. So it's something that's got to be tackled very specifically, intentionally. And if you don't have the internal resources to handle it, then you've got to get outside advice to help you with it. And there's nothing wrong with that.
And there's folks out there that can help you. I know it. I know there can be. So, as Suzanne, thank you, Kyle. Suzanne, if you could give the audience one practical piece of advice to avoid unnecessary licensing disruption, what would it be? You gave us a laundry list, but what's your top one?
Just stay on top of it. Watch your due dates, stay on top of it, do your renewals on time, and respond to any state inquiries that come your way.
Outstanding. Well, thank you. I can't believe you're going to the end, but I'm going to thank you both for a really thoughtful discussion. I took a few notes. Maybe this is not the overall greatest summary, but I believe that what I heard you say is that, and then you can tell me if I'm wrong or not, please, to treat licensing as an ongoing business function, not just an administrative task, not just a filing exercise, to be more proactive, to be a proactive company about tracking changes, to your point. Exactly, Suzanne, reviewing requirements and keeping teams aligned. Is that a fair assessment? Did I hear correctly?
You're an excellent student, Dave.
Yep.
It's just good. It's hard to try to look as good as I am and take notes at the same time. But in all seriousness, thank you so much for your time. Time is so valuable. This is such good information. I know that and thank you everybody on who's on the call right now and listening. And we will certainly be retreading this and putting this out and sharing this information because it's just too valuable. Thank you both very much. Everybody else have a great rest of your day.